Hello, a very good evening to everyone. Welcome and thank you for taking the time to attend our Global Markets Monthly webinar on key investments themes to look out for in 2021. So tonight we have invited Rong and Wei Wen from the research team to share with us more on how the different sectors may react in 2021 and going forward. So before we start, just a reminder to leave your questions into the Q&A box, which can be found at the bottom of your screen. And our speakers will pick some questions from there after the presentation. Please do not leave them under the chat box as we will not take questions from there, yeah? Okay, then we will also be sending a link to our feedback form towards the end of the webinar. Please help us to fill up so we can further improve our future webinars. And if you wish to get a copy of tonight's presentation slides, please do leave down your email address on the feedback form and we will send them to you accordingly. Yep. So without further ado, I will pass the time now to Rong. Rong, over to you.
Okay, thank you. Do give me a while I share my slide with you. In the meantime, if you can hear me, maybe I need to trouble you to just raise your hand on Zoom so that I know my audio is working fine. Okay, thank you for the response. Okay, all right, so with that, I'll start my presentation now. So today's presentation is about key investment themes for 2021. And there's actually many investment themes. But today I'll just focus more on what's more recent, which I'll go through later. So this is the disclaimer. Okay, just to provide some form of update, I mean, many investors are a bit concerned, okay, about this steepening yield curve thing. So as you can see from this diagram itself, just to address those concerns, right? Whenever after a recession, okay, the yield curve will tend to steepen. So currently, if you look based on this chart itself, there is still more room for it to steepen even further. What it reflects is that it reflects future economic growth, okay, strong future economic growth. And of course, what people are worried about is inflation, because with economic growth, okay, there may be inflation. So that can be a cause of concern, okay, but the ultimate concern is whether, monetary and fiscal policy will whether they will pull the plug out of these two ahead of time. Okay, so that is the key concerns that market is worried about. But in terms of the Fed, okay, they have two criteria that they're looking out for. Of course, one is in terms of the core inflation. The other is in terms of unemployment rate. Okay, so for unemployment rate, what they are looking out for is maximum unemployment rate, which is around 4%. So as of now, we are still at 6.3%. If you look at the real unemployment rate, okay, the real unemployment rate is around 10%. Okay, so what is this difference? The real unemployment rate actually accounts for those people who, for example, they could be a pilot, okay, but during this period of time, they maybe have to do a food delivery, Grab, that kind of thing. So they're actually considered as employed. But in that sense, they are kind of underemployed because that will not be their permanent job, for example. So accounting for all this, the unemployment rate is actually around 10%. So there's still some room to go, okay, before the plug is pulled per se, in terms of all those stimulus policy. And of course, in terms of inflation, yes, I believe there will be. If you look at all the commodities prices, especially copper, all those prices are trending up already. So there will be inflation. Okay, so do monitor this space, but at least in the near term, we do know that, based on these two criteria, okay, they will not pull the plug anytime soon. Okay. These are the few key investment themes that investors may look out for. I understand that there is quite a few things, but today I will focus more on post-COVID recovery. I believe there is quite a huge space that investors may want to look out for. The other one will be in terms of digital transformation. Okay, why I focus on COVID recovery is because currently there is this talk onto the shift of capital towards value stocks, right? Okay, so I'll address those. So if you look at this chart itself, this actually compares the S&P value index together with the growth index. Okay, I just extracted it, a few hours ago. So you can see that there is still some room, okay, for convergence between value stocks and growth stocks per se. Okay. In terms of vaccination progress, why this is important is because the sooner people are vaccinated, the sooner businesses can reopen. and the sooner pent-up consumer spending can take place. So just to give you a very brief overview of vaccination progress, currently in the US, those that receive 2 doses, I mean, if you receive 2 doses, high chance you are probably developing the immunity towards the virus. So that account for around 5.4% of the population. And if you look at those US COVID recovered patients, okay, that accounts for 5.7% of the population. So why do we look in terms of the COVID recovered patients? Is because the general assumption is that if you were to contract a COVID before, okay, there is a lower chance that you'll contract it again. Of course, there are many cases where people get it a second time. But the general assumption is that once you get it, your body will develop some form of antibodies to fight against those COVID virus the next time it enters your body. So based on these two, you can add it up and you'll find that roughly around 11% of US population is kind of immune against the virus. So the percentage they are looking out for is roughly 70 to 90%. And that is what they are referring to as herd immunity. Okay, but in terms of early opening of states, I think roughly they are looking out for is 50%. So as long as hit 50%, they are comfortable with, looking towards reopening borders and all that kind of thing. So just to quickly go through, okay, what people are concerned will be the COVID variant. But you can see from the table on the right, currently it takes up very little cases if you compare to the overall number of cases. So as of now, it is still less of a worry. And in terms of the daily number of COVID cases, okay, it has been trending down, which is kind of a positive for the market right now. A key thing that you may want to take note of, U.S. retail sales, we saw it last few weeks. Okay, it was quite strong. Main reason is because of the government stimulus that we have seen, which actually give $600 to every adult. Okay, and also enhance jobless benefit. So based on this, we are seeing very strong retail sales. And if you are looking ahead towards additional stimulus of roughly 2,400 per adult, okay, these retail sales are expected to undergo a very strong rebound. And why are we looking towards retail sales is because consumer consumption actually took up a majority of US GDP, okay, roughly 2/3. So with strong retail sales, definitely high chance we are seeing a very strong economic rebound. Roughly sometime I will predict roughly in the second half of the year. So there are a few catalysts that will translate to stronger retail spending and ultimately US GDP. So the first one is of course current declining cases and ongoing vaccine. Okay, may make people more comfortable to head outside. So that may drive some form of consumer spending. Second is of course in terms of the stimulus plan that people are looking out for. The third, if you were to look at the savings rate, okay, the savings rate currently is still relatively high if you were to compare it to the historical average. So currently it's at 13.7. The average is roughly around 7.4%. So if you were to talk about reverting to normalization, potentially it may unlock some form of funds that is in the savings, and that may what we are referring to as a pent-up consumer demand. And of course, the last but not least, this may just take up a smaller percentage in terms of the overall picture, okay, which is the easing of a travel restriction. So currently, tourism just takes up roughly 3% of US GDP. And you can see the chart on the left, probably it has already bottomed out, okay, but it will be a very slow and tedious climb up until, travel restrictions start to ease. And with that, potentially, we are looking towards the second half of the year, okay, where tourism starts to pick up. We can see from some of the figures in terms of the cruise line bookings, and that is why you see all the cruise stocks start to run because they're actually experiencing very strong booking up until 2022 itself. So these will potentially aid businesses in terms of retail, entertainment, and hospitality. So these are the four potential catalysts that we can look out for ahead. So in terms of COVID recovery, just to very quickly bring you through some of the counters, okay, which may benefit. I presented on this last month. So for the benefit of those who actually have to listen to this the second time, I'll just quickly scan through on this counter. So this counter is actually it provides healthcare services, okay, through hospital and facilities. So why is because before that, when there is a COVID cases, people who are seeking less essential medical service, they tend to put on hold, okay, because I mean they are afraid of going to a hospital and contracting the virus, okay, and somehow their medical procedure may be just non-essential, it can wait. So that actually triggered some very little a decrease in physician visits and in terms of the weekly outpatient visits. So you can see from the diagram here, as of Q4 is still relatively weak, but potentially looking ahead, if we are talking about some form of a reopening and an easing of this virus itself, people may start to go out and opt to take out all these kind of surgical medical procedures. Okay, and that could actually provide a boost for the medical utilization rate. Okay, currently, I believe that it may still remain below pre-pandemic level, at least for the first quarter. Okay, but depending on the pace of vaccination, this utilization rate should start to pick up. And of course, in terms of this company, recently they did a very huge acquisition. So they are trying to shift, in a way, they are trying to transform ultimately their whole businesses by focusing on their ambulatory segment, which is their higher growth and also higher margin areas, and they are selling off their businesses, which is underperforming, which is their conifer business. So their conifer business is like their health advisory kind of thing, which is if you look at the past trend, it has been very weak. So what they are trying to do is they are trying to spin it off and potentially free up some capital to lower their debt. Okay, and of course, there are key risks that you may want to look out for will be in terms of their debt level. Okay, as usual for many of the companies, because of COVID-19, their balance sheet has kind of tilted towards taking on more debt. So that may be something that you may want to watch out for. Okay, next one, just to give you a very brief idea, okay, you may look for, in terms of value play, okay, there is Simon Property. So what they do is they are actually the largest shopping mall. So if you are a believer that shopping mall will recover, then yes, they are the largest. It's a very diversified business in terms of property and in terms of geography. And recent results we are seeing rent collection are improving. Okay, it may suggest that things are starting to bottom out and could only pick up from here. So the management also project some growth in earnings and cash flow in 2021. And if we are talking about a stronger form of consumer spending, roughly around the second half of the year, then when people are able to go out of their house, what they will do. If you believe in it, of course, they may go to shopping centers to drive some spending. Okay, and some key concern is that yes, if rates were to increase in the future, REITs are definitely not in a very good position. Okay, but if you see the weighted average debt, which is the duration of their debt maturity, is roughly kind of quite far, 8.3 years. Okay, currently they provide a yield of 4 to 5%. Sorry. And of course, key risk, this is up to individual. Some people believe that shopping mall are in a bad shape, as people shift towards e-commerce. Okay, that is fair. That is definitely fair because I do foresee that physical retailers may be slow to reopen. So in terms of this, I don't see it as a very long-term play, even though they have their online platform, platform itself. So this will be a slow recovery, likewise for many of the shopping centers. Okay, but moving forward, if you believe that economy will reopen and consumer will go out and do some spending, yeah, then this could be one of the counter that you can look out for. I received question on the energy sector. Yes, because due to current reduced supply and also projected future demand, oil prices are creeping up. Okay, and if you're looking for an oil play, you can just look at this table. Basically, why I look at this table is because for oil companies, they are also put in a bad shape. They're actually taking on many debts just to tide over that COVID-19 period. And they are also accepting a lot of asset write-downs, that kind of thing. But if you were to put in comparison across, these are the major oil players. If you were to compare across all these players, of course, you can see that Chevron tends to stand out in terms of their debt position compared to their earnings. As you can see, they're the lowest net debt to EBITDA and also the highest EBITDA to interest expense. Okay, which kind of tower over the other oil players. Okay, another thing is in terms of infrastructure. Okay, because if you recall, Biden actually in his campaign, he pledged to have this infrastructure spending over the next 4 years of roughly 2 trillion. Okay, and he's focusing on building infrastructure with a focus on clean energy. So if you believe in that, yes, it could potentially lead to a higher demand for key building materials and equipment. But currently, I do believe that priority will be for a COVID-19 relief package. So any infrastructure plan may actually come later. Currently, their next meeting, I think, is somewhere in March, but I will not foresee any strong results from the meeting itself, because I mean COVID-19 has to be dealt with first, right? Okay, so other than Caterpillar, which I'm sure many of you are familiar with, just a very lesser known counter, but is still large enough to be in an SP 500. Is this Vulcan Materials? So what they do is actually they supply those materials for construction. Okay, so in terms of concrete, asphalt are those that they use to do the road, that kind of grainy black sand. Yeah. So moving forward, of course, if you are talking about increased spending in the infrastructure, then of course you will need all these building materials. And currently, Vulcan has been recovering, okay, from a COVID period, even though the recovery is slow. Okay, the recovery is slow. Why? Because currently for those large projects, okay, people may still be worried to commit, okay, for those large projects. So I mean, if you lose out on all these large projects, then your demand for your shipment may remain low in the near future. But if you are talking about improving economic outlook, okay, potentially some form of delayed spending in 2020 could actually roll over in 2021. Okay, and if you are talking about Biden's potential infrastructure plan, then they could potentially benefit also from public sector construction projects. Okay, so with that, I will move on to the next theme, which is digital transformation. I believe that even after COVID, okay, businesses will still undergo some form of digital transformation into 2021 or even many years ahead. Okay, so and COVID-19 actually make businesses realize the need, okay, for them to turn their business model to be more digital. Okay, and key areas of investment may include cloud technology not too sure why my slides keep jumping. Okay, but never mind, sorry about that. And key areas of a digital transformation will of course include cloud technology and potentially an upgrade of on-premises products, like in terms of a hardware or even upgrade their server kind of thing, as the world are shifting also more towards data management, data analysis, that kind of thing. And if you are looking ahead in 2021, we are actually looking towards a kind of a higher IT business spending, okay, compared to 2020. Why is because in 2020, many businesses are actually conserving cash. So they are keeping the cash, okay, because they are not sure, when the COVID period will end. But ahead in 2021, businesses actually have a clearer picture, okay, of how things are going to turn out and what's the timeline. And if you are thinking about that, if you are businesses, you'll be more willing to spend whatever you are trying to conserve. Okay, so we are looking at in terms of a higher IT business spending. And from this data corporation, IDC, they actually estimate that 40% of technology spending will go towards digital transformation. And if you are talking about digital transformation, of course, one industry that people look out for is the semiconductors. Okay, currently there is this hoo-ha about shortage of semiconductors, mainly in the automobile industry. Okay, why is because they didn't expect demand to recover so fast and so strong, so they actually underbook their supplies. And then currently now when they want to increase their orders, okay, those semiconductors they are actually operating very close to full capacity. So it doesn't mean you increase your order, I have the capability to churn the product for you. Okay, so I think yesterday Biden had executive orders, but I was looking at the executive orders. There is really no concrete action. Why I suppose is because for you to expand production, it will not happen so fast in the near term. I mean, if you're talking about building a factory and having all those machinery, okay, it will at least, in my view, it will at least take a few months to a year. Okay, so if you are looking out for example like TSMC, okay, one of the major players in terms of a chip production and supply. TSMC, they are trying to build a factory in the US, but based on their predicted timeline, the timeline whereby the factory can start production is actually earliest is next year. Yeah, and in terms of some of the Korean, if I'm not wrong, it should be Samsung. They are also planning to build more factories, but their time span is roughly a few months out based on their optimistic projection. So of course, based on this, yes, this semiconductor issue shortage will definitely linger in the near term. But what we are looking out for is in terms of a second half of the year or even until early next year. Okay, currently all those unfilled orders will actually fall onto their backlog. Okay, so once they start to clear off this demand and ramp up production, potentially they will start to clear all these backlog demand, which will then lead to a higher year-on-year growth ahead. So based on this, of course, this is another projection by Semiconductor Industry Association. They do predict that global semiconductor sales will recover in 2021, at least until 2018 period. And potentially, we believe that it will continue to grow even further, which I'll explain over the next few slides. Okay. Okay, why is because maybe I just go back to my previous slide. Why is because I foresee growth in terms of three segments. One is automobile, second is communication, third is computing. So for automobile, there is actually a few catalysts, okay, that is driving a stronger demand for cars. And ultimately, cars will boil down to the need for semiconductors. So if you look at the chart on the left, okay, that is the total global vehicle sales. You can see a very, very strong rebound back to pre-COVID level. Okay, so basically in 2020, there's a very strong dip, and before 2020 ends, it actually rebound back to a pre-COVID level. So this is something that is quite surprising to me too, and of course it caught many of the automobile players off guard. If you look at the chart on the right, okay, that is actually the average automotive semiconductor sales per vehicle. Okay, so what I did, I used the total semiconductor sales and then divide per vehicle. So you can see over the years, each vehicle actually takes up more of semiconductor sales. And why is because if you think of it, it's because of advancement in the technology. Okay, for example, last time you have a car, it's just to get you from point A to point B. Okay, now you have a car, okay, you want to have a GPS, you want to watch TV on the car, you want to have radio, okay, and then moving forward, okay, people are looking towards autonomous driving. So all these advancement in technology actually need a lot of those semiconductors to process. And if we are talking about EV vehicles, electric vehicles, okay, each electric vehicles actually takes up more semiconductors than the normal car that we have on the road now. Okay, so if you are talking about shifting towards EV and also advancement in the technology for each car, okay, that will definitely drive the semiconductor sales per vehicle over the next few years. Okay, next will be in terms of, I'll just combine this together in terms of computing and communications. So for computing, okay, it boils down to IT spending again. So projection is that it's projected to increase by 6.2% year on year in 2021. And we foresee that even though restriction continue to ease and workplace mobility improve, we believe technology spending may come in the form of on-premises office hardware upgrade and also server upgrade. So those could be, all this spending could be done in 2020, but because of 2020, they conserve cash and then they shift towards 2021. Okay, so this is some form of a rollover into 2021. If you look at PC sales, okay, people are worried that yes, if things start to reopen and a lot of PC sales are already factored in 2020, okay, demand for 2021 may slow, okay, because of a high base in 2020. That is fair. But I do still foresee that in 2021, at least for the first 2 quarters, okay, demand for PC may still remain strong. Okay, why is because if you look at fourth quarter 2020, global shipment for PC still remain relatively strong at 26.1%. So even though growth will start to trend down, but I believe that there could be some momentum that could roll over into at least the first half of 2021. So of course, if we are talking about PC sales, ultimately we are talking about more demand for semiconductors. And in terms of communication, the key catalyst that we are looking for is in terms of strong momentum for cloud services. Okay, this is everyone should be familiar with the global shift towards cloud, right? We can just look towards the two of the stronger cloud players, Amazon and Microsoft. Based on their results, okay, Amazon, their backlog for cloud segment actually see a 68% year-on-year increase. Okay, so what this means is that this backlog should continue to sustain their cloud segment growth moving forward, which ultimately boils down to a very strong demand for cloud services. Okay, and even for Microsoft itself, recent earnings have a very strong growth in its cloud segment. And upcoming quarter, they actually foresee and guided for strong growth of between 20 to 22%. Okay, which is I believe is a very, very strong double-digit growth. Okay, in terms of digital transformation, if you are aware of this counter called Twilio, yes, recently I think they have a very strong run-up. So I mean, in terms of share price, not too sure whether you have actually missed the boat. But just to give you more info about this counter, so what they do is they do in terms of communication platform as a service. So you can think of it in terms more towards customer service. Okay, so they actually owns 22 data centers, and they are mainly concentrated in the US with 71% of revenue. So for Twilo, I mean, ultimately, if you're talking about digital transformation, even some form of a customer service also have to shift towards digitally. Okay, and there are some value that this company brings. First is that of course, their platform itself can be kind of easily integrated into a company's in-house system itself. So we previously saw it with a Salesforce, okay, whereby they are able to integrate their service onto the Salesforce platform. Okay, and another thing is that they have this pay as you use. They allows you to opt in for this pay as you use business model. Okay, which ultimately allows you to manage your expenses because how much services you use with, and then that's how much you will pay. Okay, so it's kind of a more flexibility for I would say more for smaller firms. Okay, whereby they want to have a greater picture on where each cents of their investment are going. Okay, so yes, in terms of a number of active clients, it has been on an uptrend. Okay, that huge jump, as you can see in first quarter 2019, was due to their acquisition. Okay, but a key thing that you may want to take note of is in terms of their operating margin. So if what we see is with a what we see is in terms of an increase in the number of active clients, actually their operating margin still remains stable or even start to trend up by a bit. So from how I see it as some form of a scale efficiency, okay, whereby for each additional active client, you actually have to spend less. Okay, and if you compare in terms of the expenses as a percentage of a revenue, okay, it has currently been trending down, which is a positive. Key risk, of course, valuation. Okay, this figure is as of last few weeks because I actually presented on this last few weeks. So the ratio may change. Okay, and moving forward, profitability likely to remain under pressure. But if I'm not wrong, I think their recent quarter they actually surprised everyone with if I'm not wrong, it's a small profit. Yeah. So with that, just to introduce you to some of the counters that you may want to look out for and also the key trends. Now I'll pass on my time to Wei Ren for the technical analysis part. Wei Ren, please.
Hi everyone, thank you, Rong, for your kind sharing. Okay, so give me a moment while I share my slide now. Okay, so yeah. All right, so I just want to take this chance to wish all of you a happy Lunar New Year to all my Chinese friends and to non-Chinese friends, happy holiday. Okay, all right. So it's a festive of blessing, and that's why, yeah. So okay, so before I start, just want to do a quick sound check. If you think that my voice is good, my audio is good, give me a hands up, thumbs up, and then yeah, and then you can see my screen. Yeah, wow, 15. Okay. 100 people. Okay, 100 people think that I'm fine. All right. So, okay. So I think without further ado, I'll start now. All right. So basically, what the U.S. market is about is, I think yesterday night, before Dow really closed, Dow closed at 31,900 plus. Is going to edge closer to 32,000, and then this carry forward after market close in the U.S. carry on to the Asia session. The U.S. futures traded up again. It's like it touches at 32,000, but as of last check, I think now is having some slight pullback right now. Okay, so will the U.S. market continue rally higher? I think that's a possibility. The key level to look out for is actually 32,000 to 32,000, 33,000. Sorry. Okay, so but my team is remaining cautious despite the upbeat rally. So you can see my cute little picture here. The bull and then this Russian door. Actually, there's a bear hidden inside. Okay, so I think if you listen to my webinar, some of you, I saw some of them on Monday, so you know that I've been very cautious about the correction, okay, the potential correction, okay. Okay, so without further ado, some slight disclaimer, okay. So the disclaimer is basically what me and Rong share today will just be for your reference. It shall not be constituted as an investment advice or a trade call. All right, so that's all. All right, so without further ado, so let's look at the Dow Jones Industrial Average first. All right, so the technical outlook. My title don't change since Monday and last Monday. The upside momentum, I think that it still remains very cautionary. Okay, so just have a summary of yesterday. The Dow yesterday had a very strong bullish closure for the first time in 3 weeks. Like prior to that is mainly like the long candles. There's some like neutrality around the market itself. Okay, so the next thing is the Dow was seen aging, like what I mentioned, to at 31,900 region. Just a few points shy to touch base at 32,000. And then if you look at the S&P 500, it's at 3,009 region. And then if it breaks 4,000, then it will indicate a stronger impulse wave. All right. Okay, so this is the weekly chart. Okay, so why I showed it is because I think some of you it's the first time I'm speaking to you. So I'm showing a possible wave count that I started from since the Lehman Brothers collapse. You can see my cursor. This is the primary wave of the wave ones from 2009 to 2011. And then this extended wave tree there consists of two sets of 5-wave movement. So 1, 2, 3, 4, 5, A, B, C. This is a complex corrective flat, and then followed by the next up move to wave 3. All right, so this 3, and then this regular flat, a slightly elongated corrective flat, and then ending diagonal on wave 5. This ending diagonal happened at the start of December 2018, and December 2018 to all the way to what do you call it, to the last year 2020 February, before a COVID sell-off actually caused this move. All right, so but if you dissect in the daily chart, this is actually a true wave movement down to 18,000 before rebound up. Then you know that the rest is history. But if we look closely, okay, you notice that this like this rising wedge formation actually do resemble what is happening in the 2019 to 2020 period. Okay, so that's why my team remains cautionary. So what is the clear clue that okay, so when we will know that there will be a new bull market? All right, so it really sees that this red color region, then if it breaks that region, then we can see that okay, yes, we are going on to a new I mean the extended wave 5, or you can say a new cycle, a new impulse wave. But in my personal opinion, all right, so because this complete 5-wave primary phase has been completed at wave 1. If you factor in this at wave 2, yes, it may achieve the wave 2 Fibonacci retracement at 38.2%. But if you factor in the time period compared to wave 1, it takes around 11 years to complete, and then wave 2 it takes around less than one month in the cycle phase of the corrective phase. Then I think that we really have to relook everything and be cautious. But you may ask, so will the wave be sure to confirm it? I would say that not really, but there are some of the points and the resistance level and the GPS system of the wave, the whole wave structure that we can look out for, that we can be be careful about it as we ride the uptrend. Right, the trend is bullish trend for now, and then the trend is uptrend. There's an OH saying. Okay, so the next one, the next slide. Okay, so has the wave 2 of 5 cycle phase completed? So this is actually what I'm talking about. So if you look at here, after 1 it will be a B. So I know that some of you is familiar with wave theory. So wait, B is higher than the top of wave A. Top of wave A is over here. All right, so this is what the concept called expanded flat or corrective flat. So remember just now I mentioned that WXY, we are in the three-way structure of wave A, and then we have this leading diagonal for wave B or expanded wedge. So if you divided it, which I'll show you later, that this is actually a potential triple zigzag WXY and then Z wave. And we have this Monday I shared that means we correction back to support and resistance zone, force breakout before an upside, and then there will be a minor correction at the resistance zone. All right, so the signal has not yet arrived to that we can come to conclusion that okay, we are now on a bullish bearish downside. All right, okay, but this is what I can say. Look out for 32,000 to 33,000. If you can see that it's between 1.236 to 1.382% extension. If it breaks this resistance zone, then I think the next target is at 161.8%. It will be around 36,000 region, and then yeah, so we can see that there may be a correction back down to the support and resistance and support before it carry on to the upside. All right. So next one, I did another wave count. All right, so if you look here that we have 3, 4, and then 5, the fifth wave is already completed. But the third wave, okay, this is weekly chart as well. Okay, so the fourth wave means that this wave count, I factor in the fact that wave 5 is not completed yet. All right. Okay, so wave 3, wave 4, and then wave 5 target. All right, so the fifth wave, first wave target, second wave target, we are expecting to hit the first target first, and then we see how is it going to react at the second target. All right, so this resistance support zone is still very much a strong upside as well. Okay, so we are still expecting to complete anytime soon. All right, ongoing with 5. Okay, so sorry, there's some let me go back. Okay, so next one. Okay, so the same pattern. Okay, so why is there a blue line over here, you may ask. Okay, so the blue line is actually what I shared back in 2019. I think it was period in June, July, and then October. There was one report that I think about what I did about Dow theory. Okay, so if you remember, the blue color line is actually the original expanded wedge pattern. I didn't label it because I didn't want to mess up the chart. All right, but the chart will be sent out if you answer the Q&A later. I mean the survey later. So we'll go on that later. But you look at the correction. I think you look at the correction and then the upside. You may think that this one is the correction, this one is impulse, but I have a different view. All right. So if you look at the correction, the downside, actually the downside is more of an impulse than the corrective. It may have break higher, but do not be fooled by it because this one is much stronger. Back in this one was like in 2017, and then where the taper tantrum happened, and then this one is 2018, and then this one whole of 2019, and then this is COVID sell down up. So if you do the fractal way, fractal means that there's some similarity in the pattern itself. You can see that we have a upside, and then this one like is very much like similar to this one, and then you have a false breakout of the expanded wedge before it came crashing down at around, I remember the magic number 29,640 because I was calling 30,000 at the start of 2020, but it didn't happen. It just happened like 400 points. Give me 400 points more, then you sell down, okay lah. But too bad, it didn't happen. All right. Okay, so the next one you can see clearly. All right, so the correction, I did a Fibonacci extension. So the first correction happened when it closed between 100% to 111.3%. Means it signal a false breakout and then it come a correction down. The next one is actually slightly higher, between 1.236 to 1.382%. So It failed to reach 1.618%, and then it came crashing down. So right now, we may see this one, this upside, this very strong upside may mirror this one. So therefore, why I say that this 32,000 to 33,900 or 34,000 if you run it up, is very, very much of a crucial zone right now. Okay, so we are waiting for that. So if you have any like ETF in it, or you have any CFD in it, you have any futures in it, I suggest for trading stock to actually protect and protect a position in case of any violent reaction to it, like what happened to last year. All right, we will never know. All right, why? Because I think when the COVID happened in last year in January, and then February was a strong sell down. US has yet to go into lockdown, if I remember clearly. All right, maybe Rong can verify with me later on. I verified with him, so sorry. Okay, so that sell down, but it came crashing down because I don't know, is it react to COVID or is it just institution? So we will never know, but the price do tell some telltale signs. Okay, especially when you see a strong gap, double top, strong gap below the support and resistance zone, then you know that okay, we are maybe in a dangerous zone. Right, and then you can see how it reacted at the gap back in, I think this was in June, or oh no, this was in September and then October, and this was, the rest is history. Okay, so looking at the next one, here the daily chart. RSI divergence, I think Monday I shared with you like how the RSI divergence, there is a divergence. If some of you attend my webinar on Monday, but you look at it now, I think right now we are cleared for now. The chart is clear, but momentum has been flat. We are still not reached a new high after the wave, the minor phase of wave 5 has been completed. Okay, so we still need to be very careful. And then if you, after the correction, you see that this up move compared to the rest of the up move is not very that impulse. It's more of a corrective feature. All right, and then a correction back to near the key support and resistance zone before a rebound. So this was yesterday. Okay, so this was very strong. So target price too likely to be achieved within today. All right, or maybe the correction tonight, and then by end of this week or next week, it will definitely be achievable. Okay, so what I mentioned about the alternative wave count of, if we count it as a triple zigzag, what will happen? Okay, so basically the price structure of the triple zigzag does point that there will be one more upside. All right, but why do I use this triple zigzag? Why do I show you? Because first thing I want to let you guys know that this one is actually very similar to what I have over here. All right, this is actually a potential triple zigzag on the weekly chart. Okay, so for this, okay, so if we count the upside as triple zigzag, all right, so there's one more wave to the wave Z. So A, B, C. So each of the W, X, and Y, XX, and then Z, each of the component make out of 3 waves. All right, so it's a much more corrective zigzag for now. Okay, so I move on to, I'm using Ichimoku to explain, to support the case of the Dow actually moving up to higher target zone, like 32,000 to 33,000 region, which I explained earlier on, other using a wave theory. But if you look at Ichimoku, all right, we actually have clear indication that is that 3 bullish golden cross right now. In Japanese, it's called Sanyaku Koten. Okay, so it means that 3 confirmation. So what are the 3 confirmation we are looking at? So first one is the Tenkan-sen and Fusion-sen has already formed a bullish cross. Pardon me, is this not very clear? The dotted circle. Okay, so next one is the lagging span is actually above the candles, and then you see the impulse move. Although it's quite near to the candles right now, but the distance away from the candle is really that far. All right, it's really that's a wide, huge distance for now. Okay, and then the last one is actually you can look at over here. Okay, so sorry. Wait, let me. Okay, yeah, so sorry. You can look here. All right, there's the Senko span A and B is sloping upwards. Is actually break the resistance of the previous Senko span A. So we are seeing a strong upside. The key thing I think that really bring forward other than the golden cross, three golden cross, is the Tenkan Sen actually was well supported yesterday. So this was a consolidation period, break new high, and then we reach here. Okay, all right. So next one is S&P 500. This will be one of my last on my slide, and then after that we'll go into Q&A. Okay, so what is the technical outlook? So are we on the third wave or bull trap, or maybe are we on a slightly forced breakout of the expanded or running flat? So key thing is 4,000 will 4,000 be broken? All right. So look at the chart. Okay, so unlike Dow actually break new high, but both the Nasdaq and the S&P 500 actually has this rolling top, and then it's yet to break. But I think tonight we might see a new high, or maybe on Friday night. If Friday night there's a new high or H up again, then we are pretty sure that we will be on a strong upside again. Okay, so this key 1.236 is actually the expansion. All right, so wave 1, 2, and then we have 3 over here. So if break this, then we are confirmed that this minimum target of sub wave 3 at 161.8, which is around 4,178, will be achievable. All right, the next thing is if you look at price action, there's a on today's Thursday, Wednesday. Okay, so Tuesday there's some slight rebound. All right, at the major term resistance support zone. This was previously 1.272 to 1.618, which is wave 1 to wave 2 at extension level. So it broke, okay, and then after that, actually it just make higher, despite there's a correction over here. Okay, so I think we are looking for another strong upside on the S&P 500. So as always, I like to do alternate wave count to see is there a confluence of ideas, analysis, and then what can we find out from there? Are we going to look at the same direction, or are we looking at the same target price if I change the whole wave count? Okay, so because anyway is very subjective, so I always do a different set of wave count and then factor in different rules, and then do extension, sub extension, all this. All right. So if you look at the wave count, so the difference is, except that this was a regular flat after wave 3. So wave 3 is here. So I've counted this 161.8% of wave 1 to wave 2. I know that some of you will think that, okay, wave 5 look longer than wave 3, but I know that some of you will think that, okay, so wave 3 should be the longest, but this is not true. Okay, so as long as wave 3 is not the shortest wave, means that wave 1 and wave 5 together shouldn't be longer than wave 3. So wave 3 should be longer, should be the longest or the second longest within the 1, 3, and 5. All right, so if we look at wave 1 to 2, 3, 4, and then this potential wave 5. So we are looking at a near-term target that if this is broken, then we are looking at a potential upside. So this 1.618%, okay, is actually wave 3 to wave 4 extension. All right, and then 61.8% is the wave 1 to wave 1 to wave 3 expansion. All right, so you can look at, okay, this is 61.8 expansion of wave 1 to wave 3. All right, well, all right, so as usual, the alternate wave count suggests that 4,000 is still a key resistance level to watch out for if you're looking for any long upside. Breaking it, we'll see the new high, and then bringing it back to the Dow and the S&P 500, the structure, there's some similarity. So I expect that Dow, either way, there will be a leading in S&P 500 or either the Dow, and then they'll bring Nasdaq forward, despite the tech sell down that happened yesterday and 2 days ago. All right, so if you read my report, I think your Mastercard, I issued Mastercard, Visa, and then yeah, and then and then FedEx. So Mastercard, I because of time constraint, I'm really going to share Mastercard. What's the future development? So Mastercard has a 3 strong white soldier coming after the bullish engulfing above 15-day moving average. Why Mastercard and Visa? Because I think I highlighted in my report, multiple zone tested is weakened. So right now we are currently in the resistance zone. I think I expect some sort of correction back to the point origin before we rebound up to break 381. If 381 is broken, then the whole A, B, and then the expanded flag will just be ignored, and then we will be looking at a new upside again. Possible target is at $400. All right. So, but my price action tell me that the $400 is not that far-fetched for now. All right. So, with that, I end all my questions for now. All right. I end my presentation. Sorry. So now we are going to the time of Q&A. So these are our contact page. So I saw some of the questions. All right, I think Rong can go through some of them, and then some question we'll answer according to top-down approach. And then if we have time, we'll try our best to answer most of the question. If not, our email are here. And alternatively, you can go to our community page, scan this QR code, and then you can post a question there. We'll answer it accordingly. All right. So without further ado, let's see the Q&A. All right.
Okay, probably I will take the
Sure.
first question. Yep. So the first question is, why did green recovery stocks like Next Era drop so much in February? Is First Solar better than Next Era? Okay, we have to understand that this drop in February is because of people afraid that interest rate will increase earlier than expected. Okay, because of the strong economic recovery. So if you're talking about potential increase in the interest, and if you see interest as being the cost of debt, okay, potentially an increase in a cost of debt just means that if your company are holding a lot of debt, it could potentially, when you want to roll over your debt, it can come with a higher cost and a higher expense. So for Next Era, I believe, okay, because they own so much assets, and with assets, you also own a lot of debt. Okay, so if you were to talk about some form of a increase in the cost of debt, then definitely this counter may take a hit. Okay, is First Solar better? They are actually kind of, even though they are in a clean space, but they actually deal with a different segment. Yeah, I mean Next Era is more of the wind kind of energy. First Solar is more of solar energy. Yeah, but for in that First Solar, I will not give my opinion, but for solar panel industry as in general, there could potentially be some form of a rollover, because last year when there was a restriction, okay, installation of those form of a solar panel, they actually put on hold. Okay, so potentially this year there may be a rollover of a demand from last year itself. Yeah, but moving forward, definitely you will have to, of course, if we are able to see some form of a green plan from Biden itself, then that will be a boost for the whole green energy itself. Yeah. So the next question is, when herd immunity is achieved, more workers will be back to office, reduce work from home frequency. Do you anticipate remote work tech companies like Zoom to experience a negative revenue impact? Okay, I do believe that those companies that benefited from remote working, okay, like Zoom, okay, this year they may have problems sustaining their growth, okay, because last year they have such a huge boost in growth already. So based on that, this got a base effect. I mean, so this year for them to sustain that kind of growth is kind of hard, okay. But ultimately, you know, investors will still look out for how much growth will they still be able to sustain even when things start to normalize. Okay, and personally, I believe video conferencing, okay, it may be a last kind of a sticking trend even through post COVID. Okay, why? Because I believe that corporate travel will not be able to recover so quickly. Okay, so previously, I mean, if you travel for businesses, it's kind of easy. But now, you know, with all this video conferencing, there's actually a lesser need and for in terms of COVID effect, I mean, corporate travel may be slower to recover compared to leisure travel kind of thing. So that could still drive demand for this kind of video conferencing software. Yeah, but ultimately, I think growth will slow. So investors will look out for how, how will growth be when things ultimately normalize. Next question. Many analysts have expected stimulus, will be approved before mid-March. Many have already priced in the benefit of the stimulus on stock prices before the recent clash. Your view on this, please. Yes, market has been pricing in some form the stimulus already. We can see that the Dow is actually relatively stronger compared to, of course, Nasdaq. Okay, so people are pricing in a shift. Okay, they are taking profit from growth stocks after that strong run up, and they are trying to shift toward value. Okay, mainly because of this additional stimulus. Okay, but yes, I believe that we should definitely shift towards value stocks. Okay, because if you are looking on a strong recovery in the second half, okay, and then of course those value stocks will tend to recover. So I still remain bullish in the market for this year. Of course, maybe in the near term there's some form of a weakness, but I'm still overall bullish on the market this year, mainly because of the strong economic recovery. So I do believe that this is just a correction, which may be just opportunities for you to accumulate. So that's my personal view. Okay. Next question will be on Palantir and Nvidia. I think that is for Wei Ren. Wei Ren, do you want to take that?
I think before I carry on this, so I think maybe you want to say what's your view on this before I go in. Okay, but before that, I think I think I need to share about this. Please, okay, so do scan the QR code to provide your valuable feedback. We really need this to improve ourselves in the future webinar. And then secondly, I think this webinar is hosted by the Global Market Desk. All right, they are the hosts. All right, so they do have a Telegram chat that I think which later my colleague will put up the link on the chat, on the Zoom chat. You can join to get the latest update and the latest feed. All right, so yeah, thank you. So Junong, do you have any views on the Palantir and Nvidia? All right, while I go to my chart in a while.
Oh, sure. I mean, I do have my views, but I think I'll reserve them because I see that there are more questions that is,
okay.
I mean, yeah, there are some questions that people are more interested in. Yeah, no worries. While you're preparing the slide, maybe I take on this next question on Pfizer. Yes, I think many people are actually buying into Pfizer for the vaccine, but currently Pfizer's price has been relatively weak. So I think this person is asking whether Pfizer is a good buy. I think that if you are going in for the vaccine, even though the future catalyst will just be them securing more orders, increasing of orders for their vaccine. So it's kind of market has been pricing it in previously, and then it has actually taken profit, and they are shifting towards other form of vaccine players. Yeah, I think recently we see a Novavax. I mean, if you have a good vaccine with strong efficacy, people will start to rush into it. And then thereafter, after that play, people will start to take profit already. So Pfizer-wise, yeah, if you are going for the vaccine-wise, probably that catalyst is already priced in. But in terms of the general business itself, longer term play, I mean, yes, you can. Okay, but now, I mean, if you want, you may look out for other counters. Yeah, but that is just my view on it. Yeah, and yeah, do I pass on to you, Wei Ren?
Okay, sure. Thank you, Chino. Thank you for valuable feedback. Okay, so this question is about Palantir and Nvidia. So perhaps I'll do some of the Nvidia's site. So I will put my Ichimoku. All right, so currently I think, okay, I will say that basically generally Nvidia is still on a very strong uptrend after it breaks off the ascending triangle, like I think last week. There's a deep pullback back to my support zone, or you can say the demand level, and then it carry on the upside. But what I what I'm most afraid of is the pre-market right now. So if the pre-market trading at a lower time, you will look at the hourly chart, there's like some sort of sell down. And then I have a resistance that first resistance, and then I have the second resistance over here at the gap that needed to be clear to confirm the further upside. So I will say that for NVIDIA, I'll have a wait and see approach at how the market is going to perform thereafter before I actually commit to it. Right, so I know the next one is Palantir. Palantir is very, I think, very popular. Palantir yesterday, in fact, it tested twice on my support zone and then it rebounded. All right, and then but the rebound was not exactly that of the ideal rebound. All right, so my view is that that we will make A big and then C. So there will be an extended C down to make this, and then there will be a rebound at this around $17 to $19.64. All right, another theory is that I was saying that if 24.24 is stays supported, then I think Palantir will be a very good stocks to look at. But what are the key highlights? Key support region 24, and then this level at 25.34 to 26.76. If these are all invalidated, broken down, then the next tranche of defense will be 17 to 19.64. Okay. All right. So I will take on the next question. What's your take on Tesla? Haha, I know. I knew it. Okay. So Tesla. Tesla has really formed out of the 3 bearish left cross, it has really formed 2 of it. So first one is the Tenkan-sen crossover the Kijun-sen, the bearish left cross. First of all, prices still trending below the Kijun-sen, although it broke out Tenkan-sen. But the next one is Senko Span A. If you can, this it has been sloping down. All right, so although it has a rebound from Senko Span B, but pre-market down, and then even there's a recovery, we must be wary of this resistance at 766 to 791.96. All right, so if you are in the market since the day before, I think you can hold on to it before it actually I mean before you realize the losses. But I would say that if it breaks below 600, then the next support will be at 490 to 500 region. So it's around this region. Okay, so it's around here 500 490. Sorry. All right. Okay, so this I'm done. So next one is, are there investment team in China or Europe? I think there is. Yeah. Whenever fund flows, you just have to follow the funds. I don't know how to raise it exactly, answer this question. Yeah. So perhaps you want to drop me and Chua an email regarding this, Amber. Thank you. So next one is, why is AEM and UMS shares? This is much more of a US slide. So I have a short comment on AEM. I think AEM and UMS are right now in a corrective phase. All right, so but due to time constraint and this is a US webinar, I shall not share much. But Mr. David, you can drop me an email. I will answer you because I've been following them as well. Okay, next one is, what is the view on the commodities bull cycle? The commodities I'm focusing on is more of the wheat. Wheat has already gone through. You can see the wheat future. Wheat has actually gone past quite a fair bit of upside. Recently, it just cross up, slope up. So I'm targeting that wheat will have actually exponential growth. But gold and metal maybe like platinum, steel, maybe we are going on the high. Because I think this afternoon I saw London. This was this London Commodity Exchange. I forgot what's the name. LTC, I think. There is a strong surge in buying of gold, not gold, steel. All right. Okay. Next one. This is my favorite question of all. All right. So Buffett right-hand man says US stock is overvalued. What is your view on this? Any technical analysis to debunk or justify this? Oh, good question. Okay. So just as one, I want to share about this. First, look at the Dow Jones Industrial Average. This is the what you call it, the Commitment of Future Trader. This report is last week. So the next updated report will be issued out tomorrow. I think US session. So with this, I think you can look at the commercials was recently the long was added back. Okay, and then the short there is like some like the short decreased by a lot. So that's why you can see that the exponential move actually last week. All right, but well, the speculators are heavily shorting right now. All right, compared to the long. So there's the divergence. The non-commercial and commercial will always be in the opposite direction. All right, the commercial and the largest speculator. Okay, so we are looking at this. You look at the futures is down a bit, slightly touching 32,000 today. I think high was 32,033, and then there's some slight correction down here. If you look at the COT, you can see that this flat, this is not very updated, but wherever I mentioned that wherever there's a cross over here overlapping of the open interest, okay, there seems to be a move, and then where to identify the turning point, like a correction, look at extreme. So this is extreme. Extreme, you bring forward, bring below, bring backward. You can see that there's a correction. So even the COVID actually do have this extreme. All right, bring forward. You can see that, and then when there's a crosses, means that the institution are back, the commercials. But I can notice the trend that the commercials are actually reducing their long exposure already, and then what's it called, the largest speculator has been short, but is resuming back shorts again. So we may see a divergence soon. Okay, so I'm hoping that the commercials are adding more long position so that we can see can have a clear cut thing. All right. So this is what then another thing is what I mentioned earlier on my slide, that that to justify and to answer your question on the overvaluation of the US market. I think the overvaluation is very subjective. It's very subjective to I don't know, maybe he thinks that overvalued means that this is overvalued. But to me, that yes, from technical point of view, is all-time high. It seems overheated. Okay, like what the RSI momentum I showed early on, the momentum has been weakening. So, but as prices make new high, okay, I think the region that I highlighted just now, which is the red color zone, you really have to be looking out for it. All right, if there's a reversal, this will be the key for correction. If it breaks higher, then yeah, then we expect some more slight rally than before came crashing down. I hope that answers your question. All right, so we'll be sending out slides by tomorrow in PDF format. But the key thing is you need to provide your feedback. That's a trade-off, okay? And then we will send it out accordingly. We'll sort out tomorrow, latest by Friday, okay? All right, so with EV vehicle being the rage, do you anticipate the energy giants to suffer loss due to lower demand for petrol? I think Chua can answer that. Yeah.
Yeah, so yeah, with the shift to EV, I mean, yes, people are worried about lower demand for petrol, but the key thing here will be the adoption rate, okay? Because currently EV still takes up a relatively little portion of the whole automobile market. So like for example, Tesla just takes up 1 to 2% of global automobile market itself. So in the near term, yes, I mean, while the switch is taking place, there will still be a demand, I mean, for petrol. And if you are talking about energy giant, I mean, yes, petrol is one, but you know, we are still talking a lot about those industrial usage that you know is very hard to switch up to clean energy. Yeah, but the trend is definitely going down. I mean, if you look at Europe, every year they are revising down their emission rate, whereby you know companies can emit. So that will definitely be the trend. Yeah, and while I'm at this, probably I'll jump in a bit on the Tesla question just now. I mean, yes, for Tesla, many people believe that it's overvalued from a valuation standpoint itself. But from my own personal take, okay, my logic is that first, there is still a very huge market, and Tesla is the first mover advantage. So like I mentioned, Tesla just takes up 2% of the global EV market. And the second thing is that we are looking at Apple trying to come into the EV market. We are looking at Baidu trying to come into the EV market. Then most recently, we are looking at Xiaomi trying to come into the EV market. So for those big enterprise to jump in now, it just means that they foresee still a lot of potential that can sustain their growth for multiple years. And then while they are still at it, those players already in the market, they are already having this first mover advantage, which is, of course, Tesla itself. So personally, I believe I'm still positive about Tesla's general growth. So yes, I'm with Cathy Woods. Yeah. So yeah. So with that, let me see other questions. Which chip maker likely to benefit from mass EV adoption? Basically, for EV, what chips do they use? They use a lot of chips. From analog to memory. Of course, if you're talking about in future autonomous driving, there's definitely more demand for memory. For automobile, just now I was looking, I think one of it is an NXP Semiconductors. Yeah, but of course, for deep down research, I cannot provide you offhand now. Yeah, so you may want to check it out. Yeah, NXP. Let me see whether there's any other question. Yeah, I think with that, I'm probably done. Viren, do you want to take on the last question?
Yeah, sure. I'll take on one of the last question, and then I'll just do a general sum up of that. So I think that's a very, very interesting question by Thomas. What's your view on NIO? What's the support level? Okay, so NIO actually break below this support, and then it really have a close bearish cross, all right, of the Ichimoku. Right, support level wise, major support I'm eyeing at $26 to $31.99, round up $32 over here, okay, which is over here. But this will be a long-term support. So I expect, wait, let me see. Okay, so sorry. I expect, right, wait, not WXY. I expect price to actually correct further. So, and to see. So let's look at the expansion. Okay, so this what 1.382 and then 1.236 region around here. So but you can look at 38.88, 78.6 over here. We are actually kind of like a minor support over here. All right. Okay, so last question by Eric. Hi, everyone. I also use COD on TradingView, but I do not see the COD sum that you are using. Is it a personal creation or is it a paid on? This is really not already a personal creation. I don't know, because I paid for the pro version. So I naturally I found it, then I use it. It's created by someone else, right? Actually, yeah. And then I use it. I find that his is the best of it and the best rating, so I just use it. All right, but alternatively, something I'm glad that you use COT, so I think we are on the same page. Sometimes I will just use this to read off the chart. All right, so if you are a future trader, I think COT is there's many interpretation to it. All right, so I think with that oops, sorry. Okay, so sorry, I realized that I didn't share my screen on the NIO. So repeat again. So NIO. Okay. Sorry guys. I know it's late. Pardon me. I repeat again. All right, on NIO. Okay, so basically the support is well supported over here after the bearish death cross that we are looking at. Okay, but major support I'm still looking at between 26 to 31.99, which is confluence with the extension of wave A to B potentially, and then this may be the expanded flag. All right, but if price do break higher on this, okay, so let me close up this, let me invert it. Okay, A to B, this may be running flat, and then if this resistance level at 34.30 is broken, then we can safely safely assume that the upside is still on the rise. Okay. All right, so with that, I think let me share with you the okay, so this is the one that, okay, let me new computer, yeah. Okay, so so you can see, please scan in the QR code over here to give us your feedback. Bad feedback is okay, I can take it. All right, so and then we'll send you the slides and for your reference. All right, latest by Friday. All right, allow us to do some administrative work. Okay, and then the next one is this our stocks BNB community page, and then scan the QR code. All right, this QR code, scan it, and then you can actually access our website. Alternatively, you can drop me an email or Chin Rong email if you have any burning question you want to ask. But do take note that email will take some time to really answer your question. All right, so I think with that, there's no further question. Really thank you for tonight, and then to come aboard and listen to us. All right, we're very appreciative of your time, and then we hope that you bring something out of this sharing. All right, so with that, we end off the presentation for today. All right, I wish you all good night, and then tomorrow is Friday, TGI. All right. Okay, and yeah, thank you very much. And I'll be here to see any of the administrative Q&A to settle. All right, thank you.